Most of the terrain out there is very flat, but where the river drainage is, you can see some of the veins. So this is about 1 kilometer across. This just gives you an idea of the target-rich environment. All of those red lines represent veins exposed at the surface. So this is what our geologists saw when they first stumbled on the property. No previous sampling ever, high-grade gold and silver at the surface. So it was very amazing, you know, as a geologist to have this type of walk-on discovery. As part of the growth for the project, we're going to be drilling, the joint venture will be drilling 22,000 meters planned this year. They're drilling underground and at surface. We announced, I want to show you right in here, we announced a month ago, they stepped underground and drilled horizontally for 1 kilometer, and they hit a new vein out in here where you can see another one of these color anomalies. So they've had good success in expanding these targets out here. It's a conventional cut and fill. They go in and mine. This is a long section, usually mine it on 2 to 3 levels and stope it, and through a spiral decline take material to the surface and process it. We're producing about 50% doré at site, so gold silver bars on site, and 50% concentrate that gets shipped mostly to Europe. This just gives you a shot of the expanded facilities at the site. And notice the camp is down in the valley. It's very windy down there, very high winds, so you tend to keep things, it's low elevation, easy to operate year-round, but you like to keep things out of the wind. Our cash costs, we announced for Q1, we're down pretty nicely, 29% for silver, so $4.99 an ounce cash costs. This is due to operating cost savings with the expansion, and then we also hooked to the national power grid, so they are seeing lower costs on site as the project gets running and gets optimized. Silver costs also down. So that's the San Jose operation. It's a nice little high-grade mine under some expansion and optimization work that has to be done. The next feature to us is really this, and I think it's kind of this hidden asset within the company. The market's not really paying a lot of attention to this copper project. We came out with a scoping study last year, 922 million tons of 0.55% copper. This is a very substantial copper resource that it's also open at depth, open along strike, and we'll take a look at this a little more detail. It's in the large copper region of South America that's responsible for a lot of the world's copper, about 1/3 of the world's copper production. It's basically an extension of the Chilean copper belts into Argentina. Our partner there, Rob mentioned, is Xstrata, one of the top 5 copper producers in the world. Interesting to note, strategically, Xstrata has a big presence. I've colored in red all of the projects they have interests in. They're running the only producing copper mine in Argentina. They also own El Pachón when they acquired it through Falcon, when they picked up Falcon Bridge. They own part of Pelambres, and then they have the option to earn in a 51% interest on our property. So Xstrata has a big presence in this region, and we get the impression that they're pretty excited about Los Azules from the work that they're doing right now. Part of our deal with Xstrata was we had to complete a scoping study and a preliminary assessment. We've done that. We've given them the earn-in notice. Xstrata transfers their projects, and our projects go into a joint venture company that's 100% owned by Minera. And then Xstrata has the right to back in, and they have 90 days. We gave them that decision to earn in on the 29th, so that means the end of the summer, August 29th, Xstrata will notify us whether they're in or not, and then they would pay us 3 times our expenditures on the property. So we could have a fairly substantial check coming from Xstrata if they exercise. This project is, as I mentioned, it's open at depth. A lot of the holes bottomed in mineralization. We had a lot of problems when we were drilling it in that we couldn't really find the edges of the mineralization. It's still open to the north, somewhat off to the west, off to the east, though you start to get into the hills, you get limited by topography. But it's a very exciting new discovery, and we've been approached by a lot of the copper producers out there. And it's got some interesting features in that it's got a high-grade starter pit, and that's very significant for this type of project to have about 100 million tons sitting at surface that is 1%. We also, in some of the last holes we drilled, most of these holes are only drilled about 250 meters depth, but as we got later in the season, we drilled some deeper holes and hit, over 100 meters of 1% in deeper drilling, so the thing is open at depth also. Several holes have bottomed in 1% copper. The scoping study that we came out at $1.90 shows about a $500 million NPV. The cap costs are fairly high. We expect that those would drop with more optimization work, but it's a remote, big project. The annual production would be around 170,000 tons of copper and have a 24-year mine life. If you look at higher copper prices, which there are a lot of people out there that are excited about the potential of copper and where copper is going, you look at $3 copper, it has an NPV of $4 billion, internal rate of return of 25%. So we see a lot of upside to this particular project, and as I mentioned, we're seeing no real value in the market. And I think the decision point and milestone where we'll probably see more focus is as people look to see what Xstrata does in August.